Set. Okay. So basic idea is like, why do markets even exist, right? So the financial markets in general look back like say 200 years. If you are a local business owner who has just started his business, right? You can grow it to a certain scale with your money and with your friends and family's money. But if you want to say go statewide, yeah, nationwide, so you need finally someone who can loan you this money, right? The banks are one option, but it might not always make sense to go to the bank to get this money because new businesses are inherently high risk, right? So you don't want to assume that much risk, and even a bank won't give you that much money, right? If you have no track record as such. So that's when the East India Company, Dutch East India Company, first came up with the idea. They had advanced ship manufacturing capabilities. So their idea was, we'll go around the world and colonize other parts of the world and get money. And in the long term, we'll be highly profitable. But to do all of that, we need a lot of upfront capital, right? So they first set up a stock exchange in Netherlands. So Dutch East India Company was the first one to come up with the idea of going public, right? So what happens when you go public is, assume you are running a business right now, and say you try to give some kind of value to your business right now, right? तो दिखता है कि you have some factories, you have some basic investment that you have already made into your company. That comes to a certain amount. Assume that's 1 crore, okay? Hard assets, land value, upfront costs, all of that. Then you make some projection of future revenues, right? The future revenues may you will try to see how your industry itself is growing, how much of that industry ka share you can make of the profits. On the basis of that, you come up with another number. Say your business itself, say you valued it at 10 crore, another 10 crore for future valuation. So your business is now worth say 20 crore on paper. So this is an exercise which companies do when they try to go public. So they usually hire an external audit firm like EY, all of these guys. They will come and they have some standard practices on how to value a business, right? So right now you own 100% of your business, which is worth 20 crore. Say you wanted to raise another 20 crore from the public, and you say ki for this 20 crore that I'm raising, I am willing to dilute my share of the company to 50%, right? So now your company is on paper worth 40 crores. Okay? And you own 50% of that, which is 20 crore, and another 20 crore you want to raise from the public. And public ko you are making it very clear ki this is no guaranteed return, you are taking a risk, but you try to explain your entire rationale of why they should invest in your company. So that would look like the same thing. A Dutch East India Company would be convincing their people ki Asia, Africa, all of these are rich in resources, but Their people don't have gunpowder or advanced technology, so we can overpower them, right? And that is a guaranteed source. So a lot of people. So at this point, two things emerge. You want to raise 20 crores, and you want many people to buy that, right? So you have to come up with some kind of stock price, okay? So assume you say ki my one stock of my company, that is a percentage or a unit of your company, is worth 100 rupees. ठीक है? So 20 crore stocks worth of money you want to raise, 100 rupee per stock. So that is 20 lakh, right? So you have put out 20 lakh shares in the market, and you as 50% owner also have 20 lakh shares of your own. Okay, so now there are 40 lakh shares of this company. So you go public, and that is what an IPO is, initial public offering, where you put out a DHRP, draft red herring prospectus, in which you explain your entire business proposal, how much money you want to raise, and what is your price band. Okay, this 100 rupees that I came up with, that is usually a price range. So a company might decide कि वो कुछ भी कर सकते थे. They said it is 100. It could have been even 1,000 per stock or 50 per stock, right? That is up to the company. It depends on how affordable they want to make their stock price. So there are companies like Castrol in which one stock is worth 70,000 rupees. So you can't invest in Castrol even if you want to, if you don't have that much money, right? So some companies, on the other hand, will make their stock very cheap, 100 rupees or something. But all of this is initially what the company decides is the value of one stock. So that is called face value of a stock, right? And to identify the face value, the company says my price band is say 90 to 110 rupees, and it puts out an IPO. So IPO में क्या होता है? First of all, they do a whole bunch of marketing so that people come in and subscribe to it. That is the term. You subscribe to an IPO, and they say कि we have 20 lakh shares that we want to put out. Our price band is 80 to 110. Say. So what happens now is price discovery. Okay. So the people who subscribe to this, they will put in their bids. So these bids might be say 90 rupees, 100 rupees, 110. Okay, ये three bids है. And you will say कि I want to bid at 110 for X number of stocks of this company. So the way it is decided what is the actual price of this stock the day it opens on the market is whoever has the highest number of bids. So imagine 100 rupee wala bid was the highest. Most number of people said they want to subscribe at 100. That becomes your initial listing price in the market, right? Till then, all of this, it was on paper. Whatever I was explaining is on paper. But the day of the IPO, right, you get to know, first of all, who all have been allotted shares. That's like a lucky draw kind of thing. So for these 20 lakh shares, if more than 20 lakh people apply, right, so that's, imagine 40 lakh people apply, that means it's oversubscribed. Okay? 2x, the headline you would see is Paytm IPO oversubscribed by 2x. So it means twice the number of people applied as opposed to the number of shares available. The other thing is undersubscribed, where they put out these many stocks, but people read through their documents and all of that and concluded that it's not worth it. So that is undersubscribed, and that usually is a bad sign for the company. Ki even when you are first time exposing yourself to the public, they don't buy your story, right? That is what it means. To assume it is oversubscribed and there's a lucky draw kind of thing among people who have applied at 100 or more, right, bid price. So some people get it. So you usually hear this thing, right? Paytm went into IPO and the stock price dropped 50% or whatever, right? So where did money go? It's not like money gets created or destroyed in thin air through this process. So what happens is, these 20 lakh shares that were put out in the market, imagine 1,000 people actually got this, okay? So on average, each of them got like 20 lakh by 1,000. Utne shares they all have each. So these all people agreed कि 100 रुपए में मुझे ये share खरीदना, ठीक है? That was the initial thing. Once you come into the market, that is when the public decides what is the actual value of your stock, right? So how a price fluctuates of a stock is based on simple economics, demand and supply. So if there is a lot of demand for a limited resource, its price increases. Because the way you try to buy a stock is, probably you don't realize it when you invest in a stock. You just say कि मुझे stock खरीदना है and you buy it at market price. But there is another way in which like the big players acquire stocks, which is they say this is my limit price. So they say कि मुझे 1 लाख shares खरीदना है इस company का and I am willing to pay maximum 110 for this. So to get, so it's like a matching thing कि someone has a demand of 1 lakh stocks of this company at 110, who is willing to give that supply. So if there is adequate supply, so that guy immediately gets his stock. If there is no one willing to sell at that price, he doesn't get it. Or if like उसने 100 पे price किया अपना limit, imagine someone is willing to sell him at 95 itself, so he gets it at 95. But if no one is willing to give it below say 110, he doesn't get it, right? So this is called liquidity. The liquidity of a stock determines ki how easy is it to buy and sell stocks. If a stock is more liquid, you easily are able to get it at whatever price you want, current market price. If it is illiquid, then you are stuck with that stock. Like either it is a case ki you have a lot of stocks and you are not able to find buyers for that, so you are not able to exit your position. Or the other case is people want to buy the stock of this company but hai nahi market mein, no one is willing to sell. So at that time when demand is more, supply is less, price increases, and when there is more supply in the market than demand, its price drops. So that is what happens. Like Paytm ka, it went into IPO at a certain price, and when people say कि next day पे share price dropped by say 50%, what it means is imagine 1,000 people got shares of this company, right? First day पे 1,000 लोगों ने खरीदा ये stock. On day 2, out of this 1,000, say 100 people wanted to exit their position. So they wanted to sell these stocks, okay? So these 100 people will determine what is the price of that stock on the next day. So they will say कि मुझे like सोच मैंने 1,000 रुपए पे खरीदा ये stock, तो 1,000 रुपए पे I got this and I am saying कि मुझे 1,100 पे बेचना है. तो the market will see कि कोई है क्या ये खरीदने के लिए 1,100 पे. If there is no one, he will try to reduce it कि ठीक है like मुझे बस अपना पैसा recover करना है, 1,000 पे ले लो. Even if that doesn't happen, he's further forced to reduce his this, right? So it turns out that he was finally only able to sell a stock at 500. So that is what happened. Like there was more supply than there was demand. So the 100 people who decided to sell their stocks on the second day, they were able to sell it not at the initial price of 1,000 but 500. So that is what happened. It's not that all the 1,000 people who got their shares on the first day lost 50% of their wealth. The 100 people who sold it, they actually realized the losses. So there's this concept of realized gains, realized losses, and unrealized gains and unrealized losses. So when you buy a stock and you see it has gone up by 10%, you have unrealized gains on that stock because you realize it the day you actually sell it, right? So the 100 people who sold it on the second day, they took a 50% cut on their initial investment and realized 50% loss. And the other people, on paper, they are poorer by 50%, but not actually. So what happened to the company and all of this? The company came into the public market to raise money, right? As long as their entire IPO was fully subscribed, they got the money. Like they put out their shares at 1,000 rupees, people bid it for that and they got it at, they collected the entire 1,000. Next day se jo bhi ho raha hai, that is public ke haath mein. So it is like you went to the market, bought some vegetables say at 100 rupees and then you tried to sell it to your neighbor at 110. The vegetable seller initially made his 100. Uska life is not changing at whatever price you sell after that, right? But tomorrow if say कि सबने agree किया कि like neighbor को 110 पे वो बेच पा रहा है, तो then he generally realizes कि yeah actually my company is worth more than my price. So the owner himself, if he wants to like make some profit, so he will sell a part of his stock. So he also gets the benefit of his increased share price. So that is what people say कि quote कि we work to increase our shareholder value. So you are trying to improve the value that each person has of his own stock. So whatever you buy it at, you ideally want to deliver value to your shareholder, which is increased profits for them, right? So this is the general idea of IPOs and why markets exist. This is one part of the market. What I explained is called equities investing, right? So what equities investing does is it serves a core purpose in the economy and society, which is people without adequate capital. They can pool in their wealth and then combine their forces to build a business, and that in turn generates better outcomes for society in general, right? That is one reason to have your markets. One other big reason for markets to exist is to hedge risk. So the term hedge means minimize or try to somehow balance your risk, right? Uh, so I'll give you another example for this. Imagine you are a farmer. You grow wheat, which you are able to harvest once a year. Okay. Uh, so you have a whole lot of upfront investment in terms of fertilizer, soil, whatever, right? Seeds and all of this equipment. So you want to have some kind of guarantee since I've put up so much upfront investment in my thing, 1 year down the line when I harvest it, I should get minimum that much, right? And ideally much more than that. So he wants to hedge his risk, ideally, right? And imagine his consumer on the other side. Say there's a baker who relies on this guy's wheat to do his business. He wants this guarantee कि एक साल बाद ऐसे ना हो कि wheat का cost has gone up a lot and I am not able to run my business. So one guy is scared that the cost of wheat may go down. The other party is scared that the cost of wheat may go up. So markets come in between to fulfill another role, which is helping participants with matching interest to come and hedge their risk, right? So both parties come and say ki let us get into a contract. 1 year down the line, you will buy wheat from me at this agreed rate. So they lock their price. So both of them are trying to, it's like an insurance against general market condition, right? So you would see this happening at the government level also. So when Russia declares a war on, say, Ukraine, and gas prices go up, entire economies of countries get affected by this, right? Because that's the base on which fuel से बाकी सारे industry का चलता है. So like general market falls down, oil prices go up. So India as a country would have already bought futures in the market, right? So this is another instrument. Futures is one instrument which helps you hedge risk. So what you do with the future is you say कि I want to buy this resource on a future date at this agreed price. So there are oil futures, there are wheat futures, every commodity that you can think of has a futures market of its own. And it's called commodities market in MCX करके like you have for general stock market trading के लिए how you have one market, commodities trading के लिए you have another market which is called MCX. And its core function is to help participants hedge their risk. Okay, one more thing I want to tell in this, which is options trading that I do. So options trading is basically it also has like a practical purpose as such. So see, everyone knows how to make money of an asset which increases in price, right? So imagine gold prices are going up. How do you make money of it? Buy gold today, hope that price increases down the line, then you sell it. Whatever is the difference is your profit, right? How do you make money of a falling asset? Like you might have a view that gold price will fall over the next year, right? And do you guys have any idea how to make money of a falling asset? Okay. One more constraint, like assume the gold I have is the same as the gold you have, which is to say 10 gram of gold is equivalent to any other 10 gram of gold, right? So assume like you have 10 gram of gold. I have a view that in the next 1 month gold prices will fall, okay? And I know that you are not bothered about this, it's just in your locker, you have no immediate use for this. So what I come and tell you is कि ठीक है, 10 gram of gold right now is worth say 30,000. Let me give you 1,000 rupees. Loan me your gold for 1 month. I will return you this gold at the end of 1 month, and you get to keep that 1,000. That is your premium, ठीक है, for this service that you are rendering. So what do? My view is कि एक month में it will fall down, right? Gold price. I took his 10 gram of gold. I immediately sell it in the market. ठीक है? 1 month down the line, I wait for the price of that gold to reduce. I buy that thing back from the market and give it to him. So imagine I sold it at 10,000 on the day I loaned it from him. The day I bought it back from the market, say it was 8,000. So 2,000 rupees was my profit and minus the 1,000 premium I paid him for this initial thing. So that's how you make money of a falling asset. Okay. So coming to options trading itself, uh, imagine there's a plot of land in some remote place, and this place may the price of that land has been stagnant all throughout. Like last 10 years when there has been no movement, the people also don't expect any movement over there. It's just like stagnant land. Uh, Imagine you have friends, say in the chief minister's office, and you hear a rumor that there is an airport coming near that. So ideally, land prices should suddenly shoot up, right? But you don't immediately want to go and buy a whole plot of land because it's still just a rumor, right? And you ideally want an option which gives you the ability to lock the price of the land and buy this land when the price confirmation, when the airport announcement actually happens, right? So what do? You go to that village, you talk to some of the farmers there, and you say, ki, why don't you enter into a contract with me, where you say that for the next 6 months, if I ever want to buy this piece of land from you, you will give it to me at this agreed price, and for that advantage that I get, I am willing to pay you say 1 lakh. Okay? So this is your premium that you again paid for the option to buy something within the next 6 months. Uh, so now you wait for that announcement to come. Imagine it was actually just a rumor, no announcement came. So you just lost whatever was the 1 lakh that you gave to the farmers. They are also happy, like, yeah, what. So in the other case where the announcement does happen, right? Now suddenly like builders are taking up land over there and price has shot up say 100x in that place. But these farmers who have entered into a contract with you, they have to honor that contract now. It's legally binding on them. So you go and you buy it from them at that cheaper price. And if you want, like the next day itself, you could sell it to another person at a much higher price, right? So your only cost over here was the initial premium, rest is all profit. So that is called the, you are exercising your option. So you exercised your call option. So there are two terms here, call option and put option. So call is you taking a bet that a price will increase. Actually, I have not used the call yet. So yeah. Options, call option. If you try to buy it in the market, how you will see it is CE. I should have looked up the full form.
European options.
क्या है?
European.
Oh, call European, right. Call European. Yeah, so there's a call option. Here you're taking a bet that price of underlying asset will increase. Okay, that is your bet as a call buyer. Okay, so you over here are a call buyer, and the guy who signed this contract with you, entered into a contract with you, he is a call seller or the call writer. That's the term, seller or writer, right? इसका opposite is call seller or writer. So yeah, so this is your basic idea of a options contract. And okay, stock is one security. Mutual funds are another security. There are bonds. All of these are called securities. Okay, so these are different kinds of instruments that are there in the market, and you can invest in any of them. So markets are open. You have stocks to invest. You have mutual funds, which are safer. You have things like options, which is a very risky instrument and very addictive. So yeah, I'll come to options trading in general. So call option is you taking a bet that it will increase. The opposite thing is put option, where you take a bet that something asset ka price will reduce. Okay, imagine you again are the farmer in this village. You get to know that there's a factory coming next to your village that will cause a lot of pollution and all of this, so your land price will decrease, right? Imagine you get into a contract with some other person as the owner of this land, saying ki I want the option to sell you this plot of land at current market price anytime in the next 6 months. So here you are forcing the other person to buy this plot of land from you at a fixed price. So now you are putting out a put option. The call option is up, put option is you taking a bet that it will go down. In both cases, you are trying to hedge your risk. So here the risk is ki, like the land price increases and you didn't make money out of that increase. And put option mein the risk is the opposite. Like your asset will reduce in value and you have no insurance against that, right? So if you look at this, there are 4 roles that any person can assume here. Call buyer, you taking a bet ki your asset price will increase. Call seller, actually this is a bit tricky to how to show this. Okay. Calls buyer, seller or writer. Let's try to revisit like what each of these it means. If you are a call buyer, you are saying ki underlying asset price will increase. Okay? If you are a call seller, you are on the other side, so your basic bet is ki it will reduce. If you are a put buyer, you are saying the underlying asset ka price will reduce. So you can either be a call seller or a put buyer. Both of them are taking the same viewpoint on that asset, right?
So the main will change.
Yeah,
It will go down or change.
Yeah.
For seller.
Yeah, I'll come to that. Okay, so these are the 4 positions that you are there. Now let us imagine in each of the situation, what is the risk each of them assume, right? If you are a call buyer, you pay some premium to get into this bet, right? Bet or this insurance with the other party. So that's your premium. That is a max you can lose. So when I buy a call option from this farmer on the assumption that an airport will come, I paid him 1 lakh initial. That is the maximum I can lose, right? So this guy has call buyer has limited risk but unlimited profit. Any doubt on this? Right. So this guy has limited risk and unlimited profit as a call buyer. The other guy who's selling him this option, the call seller or the writer, he has maximum profit limited to whatever is the premium this guy pays, right? So his profit is limited profit, but his risk, right? Assume he is that farmer in that place. He agreed to sell this plot of land to the other guy, say at 10 lakhs. The next day he realizes his land is now worth 10 crore, but he has to actually sell it. So his loss is theoretically unlimited, right? Unlimited loss. Again, put buyer mein, you are just taking a bet that the cost of that asset will fall, and to enter that contract you pay a premium. So that is your max loss. So your risk is limited and your profit is unlimited. And for the seller, again the opposite thing, limited profit and unlimited risk. So, in both cases, calls and puts, you can see buyers have limited risk and unlimited profit. Sellers or writers have limited profit but unlimited loss. So, like people would assume it's safer to be a call buyer or a put buyer, right? But think of the situation from a probabilistic lens, right? What are the odds that a call buyer makes money, right? For a call buyer to make money, see, there are just three situations that can happen. You took a bet that the price of an asset will increase or decrease. It either actually increases, or it actually decreases, or it stays stagnant. For a buyer to make money, only one of these things has to happen, which is your call buy ke liye, you are taking a bet ki as underlying asset will increase. That is the only situation in which he makes money. A seller, though, he is okay even if the price is stagnant. No news is good news for him. And if it has fallen, of course, he has one guy who has just paid him premium, right? So sellers win in 2 out of 3 cases, buyers win in 1 out of 3. But the other part is he has limited risk, this guy has unlimited risk. So that is where the whole interesting bit about options comes. Ki where do you play in all of these places, right? That is what where people say कि मैं market में पूरा कंगाल हो गया. That is when people go and sell options, right? They will take some position on the market. So this what I told you was about asset, right? Actually, this is a good time to come to indexes itself. Options may, although it serves a fundamental purpose in society, uh, there is most of finance world and Wall Street and Dalal Street and all of them, they are engaged in activities which might not have a direct impact on society as such. It's just rich people placing bets against each other's money. So it's a zero sum game. Investing though, where you invest in an IPO or like in a company, that is a positive sum game because someone has actually got resources to grow his business, right? That's a positive sum game. Trading, which I'm talking about now, options is a form of trading, futures is a form of trading. All of these are zero sum games because if one guy makes money, someone else has lost money, right? So most of the financial market in on any given day, I think 90 or 95% of the trading volume is people who are just indulging in these bets, people who want to invest in stocks for the long term. Like they come once and say buy an SIP or like buy into a stock in general. That is say 5% or I'm not sure, even 1% of a trading volume. The rest is like computer programs and all running and constantly trying to make money. Like they buy something, 1 second later, its price has increased by 1 rupee, they sell it. But they do it on a scale which is like billions of dollars, right? So like 0.1% improvement and all is like a big achievement for them. So even where I work, True Beacon, right? It's a it's a firm which it's a AIF, Alternative Investment Fund. So what they try to do is take the money of UHNIs, ultra high net worth individuals, and try to generate alpha. So what that means is you do better than some index. Okay, an index is something like Sensex or Nifty, right? So you always hear in the market ki Sensex gir gaya, Nifty aaj बढ़ गया. So what is it exactly? Uh, you want some kind of metric with which you can assess the general condition of the market of a country, right? How do you do that? There are different companies come up with different methodologies to come up with this index. Sensex is one of them. Sensex ka formula, how they come up with that number is developed by S&P, Standard and Poor's. So they have some kind of logic for how they come up with the number. I trade in Nifty. So Nifty is something which I think is developed by National Stock Exchange (NSE) in partnership with Crisil. So Crisil is a ratings agency. So whenever companies go public, right, IPO and all of these, there are independent third-party organizations which will come in and certify ki what is the rating of your company, right? So this rating. First of all, like if anyone comes up with any ratings, like IMDb for movies, Rotten Tomatoes for movies, for you to trust it, it has to have a proper track record. It has to explain its methodology for rating. So there are companies which specialize in coming up with these ratings. In India, Crisil is one of them. Globally, there are companies like S&P, Standard and Poor's, there's Moody's. All of these, they constantly rate everything related to the markets. Like they'll rate a company in the stock market, they'll rate a country itself, they will even rate government bonds. I'll come to what government bonds are later, but they'll the general idea is if you as an investor want to invest or trade in this commodity, you have some way to judge what is the rating of that, right? So Nifty is one such index that has been come up by NSE in partnership with Crisil, and the logic for this index is free float market capitalization. I think that's a term for it. The general idea is uh, what do you want to know? Like the general state of a country and its industries, right? So you look at different industries which are important for a country. So you look at pharma, IT, core manufacturing, refineries, gas, all of these. You will pick up the companies with the largest market capitalization. So what does market capitalization mean? In my earlier example, where I said that this company has say 40 lakh shares, worth some initial amount. So this total shares into the price of each share is your market capitalization. So what that means is this company is worth this much, right? So market cap, that's the short form for it. Uh, so in India, your Nifty index will be comprised of the top industries in each of these different industries in the country. So oil and refineries, may you would have a company like Reliance contributing because that has the largest market cap, right? Something like say pharma, mein there's a Dr. Reddy's lab or a Apollo hospital. These would be the representative industries. Uh, so vehicles mein Tata hoga, Mahindra and Mahindra. These are the companies. So Nifty 50 is an index comprised of 50 top companies across different industries in India, and their weightage is decided by how much is your market cap, right? So a company with a large market cap will contribute larger to Nifty index. So when you say that Nifty went up, say, so say Reliance assume contribute 15% of Nifty index. So when Reliance goes up 15%, it is actually contributing to Nifty going up 15%, right? But yeah, the net thing will be reduced because of all the other companies in that list. So when you look at any country's index, so India has Nifty and Sensex. Every country will have 2 or 3 top indices, right? Uh, so the way you look at it is, if you look at a global map, right? Markets open like in the morning, right? So the first index to open would be something like Japan mein Nikkei index. So you look at how Japan opened. So people say Japan opened red. So what it means is Japanese index fell in the morning. So slowly as like the sun moves here, you track Singapore index, right? Singapore index is usually a good indicator of how India's index will open because a lot of Indian companies also trade in Singapore index. So that's called SGX Nifty, Singapore Exchange Nifty, right? So you can actually see this, right? Like as the sun comes here, every market opens and you are traders, that is what they are looking at, how different markets open. Because at the end of the day, your index is reflecting the share price of a company, and the share price of a company is decided by what is the price that sellers and buyers are willing to pay, right? So when an index goes up, it means every stock price in that index has probably gone up, and that indicates optimism, right? You When an asset price increases, it means people are optimistic about that asset in itself. So it is a good barometer to see whether a country is growing over time, right? Sensex and Nifty and all of these I think started in late 90s or 2000s wala decade. So it started from zero. Before COVID, Nifty was at 18,000. When COVID happened, I think it fell all the way to 9,000, a 50% drop. So these are like freak occurrences that happen in the market. These are called black swan events. Yeah, the general idea is all swans are white, so a black swan is a rare event. So black swan events happen, and one of the reasons I'm so attracted to the markets is uh, it mirrors life in a lot of ways, right? markets are cyclical. So what happens is every 9 or 10 years, you will see a boom and a bust cycle, much like life, where you go through ups and downs. Because just look at our recent history, right? 1988, there was a huge market crash in the US. 2000, there was the dot-com bubble when companies fell. 2008, there was a housing crisis when again markets fell. Earlier, what used to happen was there's a saying ki, when the US catches a sneeze, the Indian markets catch a fever, right? The idea is basically to say ki any small change in the US markets affect Indian economy a lot. That is not true anymore. These days, Indian markets are way more resilient. Even when US and other foreign markets fall and are very volatile, that's a term for it, right? An index which varies a lot, or any asset whose prices vary a lot, it is said to be highly volatile. Volatility is good for traders, but generally it indicates some kind of disturbance in the economy, right? So for the general society as such, volatility is not good. But if you're trying to make some quick money, it's a great thing because you can take bets on prices increasing and decreasing. The worst thing for a trader is, at least like if you're a buyer, the worst thing is an asset whose price is not even moving, right? So that is a bad scenario. That's why, like, in some sense, like, it is fair for people to hate people on Wall Street or Dalal Street because they prey on disturbances that happen in society. They are excited. There's a scene in uh, The Big Short where these guys take a huge bet that markets will collapse. And when their bet actually turns out to be true, they have made millions of dollars and they are celebrating. This older guy tells them, ki, like, do you realize the fact that people have actually lost their livelihood today, right? When an index goes down 50%, it means people have lost their jobs, right? So yeah, anyway, that's the general idea ki, how markets are like a reflection of a lot of what goes on in society, and you can look at markets and say ki, like, is the society stable right now? A volatile index means ki there's some kind of disturbance, there's probably a war somewhere, right? A stable growing economy means ki the country is peaceful right now, everything is going well. So investors try to take a bet ki in the long term the index will go up and companies part of this index will rise and their money will compound, right? Why should you even bother investing in the market? The main reason is inflation, right? Inflation is basically the idea that money spent today is worth more than money spent in the future, the same amount. Because if a country is improving and growing and all of that, your money today is worth less tomorrow, right? When your parents tell you we used to get like so many things for 1 rupees and now you get it for 100, this is basically inflation playing out, right? It is a good thing. Like parents are like often saying that everything has gone up. What it actually means is like your economy has grown, people have more savings with them, and naturally an equilibrium formed where everyone is now able to afford to pay that much. So inflation is not a bad thing. For a country like India, you need some kind of healthy inflation, like 5 to 6% every year for a country to progress. So inflation is not an inherently bad thing. But for you on an individual level, inflation matters because anything that where your savings does not grow more than this inflation rate, you're actually losing money. You can't afford to buy the same things if you kept your money in a locker and it didn't grow. Like your loaf of bread now costs more, but your money was just stagnant, right? That's why people should invest in the stock market because here you are basically taking a bet on your country, right? People always come up. First of all, like people are scared of markets in general, just to invest because they have heard all of these stories about people losing all of their money. I think it's exaggerated. You can lose all your money, but only if you trade and invest in risky instruments, right? Think of it from a very intuitive lens. You are investing in a Reliance stock. Reliance may the share price is say 1000 rupees today. Tomorrow it will not go down to zero because Reliance has factories in the ground. You can see it everywhere around you. It's not going to vanish overnight. So it's irrational to assume कि it's risky to invest in a stock like Reliance, right? So that's the first thing. And the other thing is Reliance is catering to a whole bunch of industries, right, across India. They are involved in oil and gas. They are involved in petrochemical, in internet, all of these promising things, which will be the future of this country, right? India is still, like, in many respects, a very poor nation, and it's a developing nation. So, what is the idea though? If the country improves over time, what will happen is a lot of people who are right now poor and in the lower classes, they will move one step up, right? Every generation tries to do better than the next generation, and you go one strata up in society. So when a lower class person moves to the middle class, his aspirations increase in life. So he will start to buy things that you and I are buying today. So look at those things what you are buying. Whenever I go to people's houses now, one of the things I try to notice is what are the microwave ovens you use, what are the washing machines you use, what is the brand of atta you are regularly using or rice you are using. That is all it takes for you to identify great stocks in the market. It's not some sophisticated thing. When you are saying I invest in mutual funds, you are basically saying some fund manager somewhere knows more about what will pan out in the future than you as an individual, right? I don't buy to that notion. I'll tell you why. Why individual investors are like better placed than institutional investors. That is a term for them. A retail investor is you and me who invest in an individual capacity. An institutional investor is my company, say, or like a LIC of India. LIC collects premiums from everyone and it says I'll give you money at a future date, right? How do they make money? By making investments everywhere. So LIC is a big domestic institutional investor, DII, and there are foreign institutional investors. Like US, may imagine there's some teachers' pension fund and they have to give out pensions every year. How does their money grow? They try to identify countries around the world where they can put their money and it will give them a better return. A developed country where it's very hard to find these opportunities altogether, right? Because most of the industries are mature. Unless you come up with something path breaking, your net audience itself is limited, right? When everyone is already satisfied with their basic necessities, unless you come up with something radically different, or your product is so niche that you can command some premium pricing, like an iPhone, right? Those are the companies which increase in like a developed country like US. But for a country like India, where the majority of the population is still poor and aspiring to achieve basic things, you as a person on the ground have better visibility into what people are buying. So try and observe what, like in your supermarket, what are the items that go off the shelf fast, right? And I was telling how I identified a bunch of great stocks in cars, right? So I like cars in general, and while I was on this break, one day I decided I'll visit a bunch of dealerships just to do a test drive, and I just like brochures and all of that. So I went to each of these places and I was talking to them, and every place they were like 6 months waiting, abhi book kar lo. Right? So I got to know I tried to think why that is the case. Like, how come there's such a demand supply mismatch? So what has happened is COVID happened. A lot of people who were able to work from home and all of that, they managed to save a lot of money, right? No trips, no clothes, nothing. A lot of money was saved, and I forgot the term for it. It's called something like revenge shopping, right? People were home for 2 years, they saved all this money. When everything opened, they were like, we will shop with a revenge, we'll travel with a revenge. So this revenge consumer behavior is coming up. So even if people complain about traffic and roads and potholes and everything, from a psychological perspective, every person wants his first car, right? That's an aspirational thing that won't go away. It's an emotional thing, it's not a decision based on logic or rational or anything. You need to like make peace with these things. Like markets, there is an efficient market hypothesis, which is to say कि markets में the price of an asset is always correct because there is a natural equilibrium established. Like irrationality goes away when there's a whole population involved. There's a whole bunch of people like me who don't believe in that theory, because markets are irrational from time to time. That is how market crashes happen, right? If they were rational, there wouldn't be a crash. It would be just stable, right? A crash means that suddenly everyone is like, what the fuck? So they were irrational up to a point. Finally, rationality came back into the market. So a price correction happened, right? So that is what happens in markets. So I saw everywhere like there is the 6 months waiting for cars. And I was like, I don't want to bet in any individual car company as such, because I don't know who will be the winner eventually. Anything can happen when you take a bet on an individual company. But I was like, all of these companies don't manufacture all the components involved in a car. So a thing like a tire or a gear or a clutch, right? These things are manufactured by small and medium scale enterprises, and they are the ones who can actually like compound your money. A Reliance is not going to 2x in value like today or tomorrow or any time in the near future. But a small company which suddenly finds product market fit, it can go up any number of times, right? 20 times, 30 times, 100 times even. So that is the basic idea ki if you want to go for a risk-free like walk in the markets, go with these stable companies. Like you won't make a lot of money, but you'll also not lose a lot of money. But if you have this kind of flair for identifying trends around you and making sense of those, go and invest in ancillary industry. So right now what I did was I invested in a bunch of these companies which are auto ancillary, and I invested just before the quarterly earnings report came out. So once you go public, that is one of the disadvantages in a way. In your private, like your books are your book, right? You don't need to justify it to anyone. The moment you go public, other people are involved in your company. So you have to put out quarterly earnings, cost, profit, everything. So right before like this second quarter earnings were coming out, I identified a bunch of stocks, and auto ancillary was one of those industries, and I made like great returns on those. Like I'm still invested in those, but because that's a long term bet. Uh, that is one other thing, right? Some things like you learn about yourself and your biases when you try to make money, right? Because uh, in a certain sense, this is one industry like where people can't bullshit a lot, because at the end of the day, you can look at any trader and ask him ki like, did you make money today or not? It's a very black and white thing in that respect, right? In any other industry, people can fall back to their experience or degrees and things like that. But if you're a PhD and you lost money today, like how can you claim you're smarter than like a 10th standard dropout who's trading on his own and made money that day, right? So in that respect, like markets are a leveling field in a lot of way, and it offers leverage, right? What leverage means is the ability to hit bigger than you currently can, right? The idea is like, imagine if you are a guy with say only 10 lakhs of savings, but you imagine ki you want to become a Rakesh Jhunjhunwala, a billionaire or someone, right? How do you do that? The main problem in a lot of other industries is to make a lot of money, you need a lot of money to begin with, right? But trading gives you leverage, which means ki you can take multiple times bets on your initial capital. Like you got into the market with 10 lakhs, the market say offers you 5x leverage. So you can take bets up to 50 lakhs probably. This is how people lose their homes and houses and everything, because leverage is a double-edged sword. It has the ability to give you more profits on your investment and also get you bankrupt. Like that's 5x more leverage on your loss too. So that is what happens. So all of this forces you to be very clear about your own thought process. Like I don't know, outside traders may be like all kinds of personalities, but inside, if you have to be a great trader, you need to be very clear about your biases and what kind of I mean, honestly, you lose money, right? If you're not honest to yourself, you will lose money. Initially, there was these days when I used to go into trading, and I distinctly remember this one day. I had taken some bets in the market, and the market opened, and in the first half hour itself, I was, I think, plus 3 lakhs or something. And for no effort, like it was something which took me 5 minutes to do, and I was plus 3 lakhs, right? And I was like, great, my bets are turning out true. Let me bet more on this. I'll make more money. I went up to my mom and told her कि फोन पे मैं जो एक महीने में कमाता था देखो मैं आज एक दिन में कमाऊंगा. And so I placed more bets on that. And they didn't ask me anything about that. Dad also heard that conversation. अगले दिन dad was asking me कि क्या हुआ, like कमाया जो तूने बोला था फोन पे का एक महीना. तो आई वॉज टेलिंग डैड कि पापा मार्केट से कुछ दिन पैसे मिलते हैं और कुछ दिन लेसन्स. कल मुझे एक लेसन मिला. So you don't that is called like, I mean that was a clear thing where I entered into a position with a clear idea of what I want to do. Then that thing happened and I got cocky, right? I was like, I can make more money on this. A rational approach would be like, what you said would happen did happen, book your profits and get out, right? The same thing happens when you are losing money. Like imagine you bought something at 20 rupees and your thesis was it will go up to 30. The next day it goes down 5 rupees, it comes down to 15 and you are like, I am correct, the market is wrong. Finally 20 falling down to 15, what it means on a more intuitive level is there is more supply in the market, people are trying to sell away their stocks, right? So there's less demand. So trust what the market is telling you. Don't be cocky enough to think that you are the one person with the contrarian opinion and you will make money. What most people will do is 20 or 15 पे गिरा, अब तो और सस्ता हो गया मेरा bet. Like जब ये 30 पे होगा, I would have doubled my money. Let me buy more. The next day it falls down to 10 rupees, and you are still like, now it becomes an ego issue. How can I be so wrong? Let me triple my investment on this. And that is how like you lose all your money. And a lot of this even happens because institutions, and I don't know, like this is controversial to say I guess, but you will see these WhatsApp groups and all jahan pe people will be like, yes bank kharido, yes bank kharido. My dad, like when COVID happened, I took some of my mom's money and my own money and I told them I'll do my own investment and I'll give you better returns in the market, right? And I was doing my own research and everything. But there was this one stock which I bought because my dad asked me to, Yes Bank. Okay. He was every day coming up to me and saying कि neighbor बोल रहा है Yes Bank खरीदो, ये वो बोल रहा है, WhatsApp में आया है. And I was like, I will buy this. I don't believe in this. 400 रुपए पे start हुआ था Yes Bank. 200 पे कुछ गिरा था when he asked me to buy this. I was like, I don't believe this, but this will be a learning lesson for both of us. I'll buy Yes Bank and we'll keep tracking what happens to Yes Bank. When I finally exited like the markets 1.5 years later, I gave my mom 2.2x return on her investment. I got a 2x on my own portfolio, and I'd also taken a bet on crypto where I got 2.5x, right? So great thing for me. But in that entire list of stocks that I invested on behalf of my mom and me, I told my dad, do you see the one red in this whole list? Yes Bank ended up at 17 rupees. I bought it at 200 or something, and I was like, I had this hypothesis of what happens, and this got proved. Whenever a big player is invested in any company, right, you have put say thousands of crores in this company. A retail investor invests max say 1 lakh, 2 lakh in a company, right? So you and I can buy and sell a stock, and the stock price will never get affected. Like तेरे उससे ज़्यादा demand नहीं बढ़ा. But say a big player who has invested say 1,000 crore in a certain company, how does he invest in a company? He doesn't buy everything in one shot, right? If he tries to do that, demand will increase and price will shoot up. So he will try to adjust his buying over several months, okay? If you properly look at market charts of certain companies, you will see this trend. Like at the end of the day, they apply some logic to do this. So the data doesn't lie. You can observe all of these trends, and even when they want to sell, when they realize that this company is like not actually good and they want to sell, they won't exit their position at one time, because then the market will be flooded with supply and the price will go down. So they'll again try to sell it like in chunks, and when they try to do it, they will start some rumor in the market saying कि ये बहुत बढ़ने वाला है, like अभी गिरा है but फिर से bounce up होगा. So institutions offload their risk onto retailers. So that's where retailers get fooled and they lose all their money. I was like, ये WhatsApp सब जब आया तभी मैं समझ गया था ये शायद कोई है, but I wanted to see what will happen. maybe I don't know, maybe these guys know more than me. Your neighbor, which you say he's been in the market for tens of years, I'll trust him for a. So now I never take any recommendations from anyone. I'm like, even if that stock which I hear through a recommendation goes up 20x, I learn nothing because that wasn't my hypothesis. Like that's just like a luck, right? And I have this personal philosophy: money which comes easy also goes easy. So if you have like just bet on something and you got it, like there's an equal likelihood you lose it as easily, right? So do your own thesis. Even if it's wrong, you learn something, right? And you have something to look forward to. And that whole process where a stock goes down in value and your hard-earned savings are going down, you learn a lot about yourself in that process, right? How do you process the idea that 75% of your net worth, say, was invested in the markets and the market fell 50%. So on paper, now you lost half your wealth. Like, how does that affect you personally as an individual? So it can teach you a lot about all of that also, right? Anyway, this is a general sense ki matlab, market has a bunch of different instruments out there. Stocks is something which everyone knows. Options is something I introduced today. I think I'll need a separate sessions for how do you actually trade in options. I just give an idea of what options are, right? But it's a very interesting thing. Like it's a fun thing that you can. My objective is ki I explain options to people and people like whatever money they are comfortable with. Like even if it's like a movie ticket's worth of price, right? You try and buy a call option and see like a bet key if it increases, decreases. You'll have fun going through that process, right? Um, so you do that, but there are a whole bunch of other instruments also in the market. Uh, there are things like fixed deposits, obviously, bank se jo milta hai. There are government bonds. So a government also needs money from time to time, right? The idea that I mean, if you have a very naive view of how like economy works, it's not that government just prints money and it has money. It needs money from people to fund a lot of its projects also. If you just arbitrarily start printing money, anything in huge supply and with less demand, its value will decrease. That is how entire countries, like Sri Lanka recently went through an entire crisis, right? What happened there was the Chinese gave them a whole bunch of loans, saying ki, why don't you invest in building, say a port or these and that and all. But as a country, you need to be rational, right? Ki, what is the maximum amount of money I can generate in the future, right? Utna hi tum loan loge, no? Like in personal life, you wouldn't take like 1 lakh crore ka loan if you have no way of repaying the interest, right? But at a country level, people do this because like at the end of the day, any government or any country is individual people, right? People can be bribed or pushed or like anyway. That's how like on a global scale, like shitty decisions get taken at the top level because individuals are prone to like normal vices that exist in everyone. They are prone to take a bribe, take like whatever, like they would be susceptible to people blackmailing them and all of that, right? So yeah, markets can be irrational. Like that is where you make your money. The idea that everyone around you sometimes are stupid, like that's not a bad thing to say because that is how stupid trends pick up, right? Matlab, if everyone was rational, like our society wouldn't be the way it is. Like so, make peace with the fact that any flaw that exists in you. Uh, Probably exists in the other person also and try to see who are the players involved in this flaw, right? Coming to that point, like here's a pop quiz. What do you think is the industry which has consistently delivered the best returns, like over a long term? It's true of USA, it is true of India. In any country, this particular industry ka stock over long term, like say over 50 years and all, has delivered great returns. Like it's one of the best performing industries. What do you think the industry is? I don't need the company. It's the industry. Huh?
FMCG.
No. Like, be more specific, like, if you can. Like the specific thing. I want the product that they manufacture.
Condoms.
No. Like, you're thinking along the right lines, but not condoms.
Colgate toothpaste, like
Yeah, that is also a thing. But think something which people can't do without. Like See, imagine something like soap also. If the economy is very bad, people might even cut down on baths and all, right? Once in 2 months and all.
Maybe the gas and
Cooking oil.
Yeah, but gas and all, the problem is the price of that commodity gets stabilized over time. Like it's a very essential requirement. So government will offer subsidy, and if you are a person in that industry, you can't make a lot of money because the government will cut down on maximum profit that you can make.
Baby products.
No.
Cooking
petrol.
oil.
Go for it. Go. See, before coming to this topic, I was saying ki any flaw that exists in you, assume it exists in the other person, and how would you make money of it? Like think of industries which prey on people's addictions and
Pharmacy or something.
it's
Tobacco.
tobacco. It's tobacco. ITC in India, Indian Tobacco Company. That's one of the consistently performing things. In the US, there was this company, Philip Morris, I think that was the name of the company. I think that's the best performing stock over the last century or something. They did so well that there was so much hatred against them. They had to split their company into different and rebrand just to show that we are not like that profitable as such. So I took a bet on this also. I was like, what does my generation drink? Okay. So I looked at common brands that we all drink: Black Dog, Smirnoff, White Mischief, Blender Sprite, and I was like, a bunch of these are made by different people, like United Breweries, United Spirits, all of these. So I was looking at all these industries. I found one company which does contract manufacturing for all of these brands. I was like, this is a great company because across brands, like all the favorites, these guys are manufacturing, and they are now beginning to start their own brand also. So they have a great idea of what it takes to build a winning product, and now they are entering into that industry. So I tried to invest in that stock. That again, I invested hardly 2 or 3 weeks back, and it's already up 15 or 20%. Right. One another thing I thought was my generation to biryani pel ke khati hai, and that's not going away anytime soon. College people and these people throughout their life will eat biryani a lot. So I was looking at basmati rice companies. India Gate basmati rice. Okay, and good time to say a disclaimer. I don't recommend any stocks. These are just my personal views and not of true weekend either. Cool. Anyway, so I looked at India Gate basmati rice. They have 90% monopoly of basmati rice market, and they are a vertically integrated company. What that means is they control the supply chain right from farmer level procurement to export, and 90% monopoly. That is like unheard of. Again, right before like the quarterly results, I invested. I told some of my close friends that I'm doing this. Like I think you guys should check it out. None of them invested. Like 1 week later, I was like, guys, it's up 12%. किसी ने invest किया? They were like, नहीं किया. 2 weeks later, I was like, it's up 26%. अभी किसी ने किया? Finally, someone invested in that stock, and it's still going on. So that is another psychological thing I want to come to. Wow, like it's not planned. ऐसे ही की कार है.
What's the significance of investing right before the quarterly report?
Oh, okay. Quarterly results are a way for the company to tell you how they did in the last quarter.
Right.
So this data is not available with the general public. So the moment they have this data, they'll decide ki, is the company doing good or bad. And if you already have an idea that it's doing good, then you invest before the quarterly result. Moment the data comes out, the price will shoot up. So yeah. Actually, like I'm saying all of this ki quarterly result ke पहले मेरे को याद भी नहीं था कब है quarterly result. It was just great timing.
The same thing applies to exiting also, right?
Yeah, like if you have the counter viewpoint ki, I mean yeah, it's basically you can time the market in some ways, I guess. People say you shouldn't try to time the market, at least for long-term investing. Like if you are saying ki I totally believe in this company, if you are a long-term investor, your philosophy should always be I never want to sell this stock. Like unless life forces me in some circumstance, I would never sell this stock. That is the idea with which you invest. So Warren Buffett, who's like delivered I think 29% return over like a 30 or 40-year time frame, which is phenomenal. Compounded 29% every year, right? So his idea is always that I buy a stock with the intention never to sell it, and he tries to buy that entire company itself. His like he's one of the people I'm inspired by, because he always is like data and all about the stock good. I use that all for my due diligence, but the end of the day I make a decision by talking to the founders. Like I bet on people, not the companies by themselves. Like because how your company is right now could be a function of all different factors, right? Macro conditions like economic, like all these things. But people you can bet on, like these people, when the times are good, they will do much better, and their companies will do much better. So that is how you used to always invest in companies. Like identify a great company based on fundamental things, then talk to the founder and make his final decision. So one of his best, like the stock which he hasn't sold ever is Coca-Cola. So he was like 50 years back people like sugared water, they like sugared water now, and 50 years from now they like sugared water. Coca-Cola as a brand is recognized worldwide. It has a brand value, right? That will always last for a century. So he keeps trying to accumulate. Whenever Coca-Cola stock price drops, he gets more of Coca-Cola. So that is the idea. And Another thing is, he says never invest in a company that you don't understand. I also try to do that, like to some extent. The idea is like, see, I invest in a whole lot of chemical companies, core manufacturing and all. It's not that I know what a chemical company does, but my bet is in the next 20, 30 years, India will be a great country. Like, it will have a lot more need of chemicals and all of these core industries, right? Uh, though these companies are already showing great performance and they are well poised to capture the market, right, in the next 10, 20 years. So I just try to see that, like before COVID, my investment thesis was very simple. I saw markets fall a lot. I was like, this is a black swan event and markets will eventually come up. COVID will leave the world, right, at some point. So it is just a matter of time. And if you have money lying around that you can invest, what are the companies you'll invest, right? That time I didn't look at any, I had no understanding of any industry or anything. I just looked at charts, past 10 years, what are the industries first of all I want to look at. So oil and gas, natural, like power, hospitals, pharma, FMCG, all of these industries I looked. I looked at a bunch of charts which showed the share price over time, right? Anything which is very stably increasing, I'm like, and suddenly dipped because of COVID, I was like, this is an anomaly and it will correct, right? So just a matter of time. You just wait to see ki, is the market falling further. There are phases of bust and boom, and there are phases when consolidation happens. So consolidation is a sideways movement where things are slowly increasing or decreasing. So in consolidation phases are a great time for you to get in, right? So when COVID markets fell in March 2020, first I waited to see is this bottom or is it going to fall further. I waited till July and I was like, right now, like at least core industries have opened up, and generally people have some kind of equilibrium with COVID, and I saw markets had flattened out, right? So I looked at all different industries, picked the ones which were stably increasing and just invested in those, and this one Yes Bank, which was totally not fitting my pattern, right? And in like 1.5 years when people came out of COVID and all of that, it gave me 2.2x. Like no smartness, nothing, just a simple thesis and like you betting on that things will turn around, right? So even with like actually, yeah. All of this is not to say कि you will do well in the market, even if you have a great thesis and everything, because timing matters a lot. When 2000 में .com bubble happened, there was some very smart guy who had come up with this detailed article on why all the companies right now are irrational and who will fall and all of this. And he bet his life savings on the fact that markets will fall. But you can't just take a position, you need to say by when. So he said that thing and he took that bet that markets will fall by this date. After that, I think for the next 6 months or something, also markets increased a lot. and then they suddenly fell. So this guy lost all of his life savings because he wasn't right on timing, right? So a lot of a value of a company is determined by you and me and what we pay attention to. Right now, renewable technology companies' ka share price is increasing a lot. That doesn't mean that they have a great business model or like renewables are the way to go forward. Maybe, yeah, they are the way to go forward, but you don't know whether any one company here will capture that industry, right? Sometimes there is an industry which is great, but all the people are undifferentiable in that, so no one makes money. So that also happens. Everyone is just doing ऐसे हल्का सा business. Like airlines is a great example. It's a place where cutthroat competition on prices. People usually don't care about much else, right? Whatever is the cheapest you go for. So it's very difficult to make money there in a cutthroat world. But a person like Apple, which builds a luxury product which has so much fan appeal, they can irrationally price their thing anywhere, and they have huge potential to make money, right? That's why an airline company, although you might say ki, they provide a more roti kapda makan type kind of need to the society, their share price will always be lower, their market cap will be lower than an Apple which makes so many luxury products, right? So clearly, like, markets are irrational and they don't favor what's best for society. They favor whatever appeals to people's emotions and psychology. So if you have to be a great trader, matlab first be at peace with yourself, what kind of a person you are. That is when you will be open to identifying trends, right? If you are a person who is judgmental about the fact that people smoke and drink and you don't invest in these stocks, sure, I mean, that is an ethical viewpoint. You don't want to support a business which preys on people's that, right? But if you don't have that viewpoint and you're just like having a superficial opinion ki I want to invest in these companies, that's just plain stupid, right? Someone else is making money just because they are comfortable accepting the fact that people have these flaws in them and they do smoke. That's why tobacco does so well. Government increases taxes on tobacco. These guys pass it on to the consumer. They will be willing to pay how much ever is required for that one cigarette because you can't do without it. Any chain smoker, they'll tell you like whatever is the price, they'll pay for it, right? Or they'll come down to PD eventually. So yeah. Anyway, so yeah, I mean that is a general idea. So I was talking about bonds. Government bonds are basically another financial security. It's like fixed deposit but gives much better returns. It is basically government saying ki I have to build a national highway or something and I want to generate money for it. You guys give me money and I'll return you 8% or 9% or whatever over this time period. So that's a government bond. There are things like treasury bills, state government bonds. All of these are relatively safe instruments where the government is standing guarantee that they'll pay you money. And like if you can't even trust your government, like who can you trust, right? Like in terms of money, like they are finally controlling the banks and everything. So it's considered a relatively safe instrument. Then like as you go riskier, yeah, futures, then options, and option selling is another thing. But even with these, there are ways to hedge risk. And matlab wahi, generally, like people who say ki like something is bad and I'll never do it, like I just feel like they're being very close-minded, right? There's always a way to hedge things and take the advantage out of any situation. You just need to first of all make peace with the fact that this is a piece of knowledge, or this is a situation that exists in the world. Like, what are you going to do about it, rather than just judge it, right? So yeah, I mean that's broadly it. Like there was no structure to it as such. Whatever I felt, I said it. So if you guys have any things which you want to know more, okay.
I have a question slightly unrelated.
Yeah.
I've never understood what insider trading is. Can you
Okay,
explain it with an example?
cool, great. I can talk about what I can do at True Beacon. So insider trading is basically the idea. ठीक है, assume I am a company which has lakhs of crores to invest. Assume I am LIC of India. I have 1 lakh crore ka corpus with me, and I can invest in any company in India, right? The company that I invest in, because of the amount I invest in that company, uska price बढ़ जाएगा. Like I can single-handedly take up the price of a stock by investing say 100 crore in you, right? So you as an employee at LIC could go back home and buy this company's stock in advance before the announcement comes ki LIC has invested. So you have done insider trading. Like you took information that was not available to the general public, which was privy to you, and you bought something which you were not supposed to buy. So that's why a lot of institutional investors and traders have have this conflict of interest and these things they have to sign, saying ki you won't front run your investment. So this is what you have done. Like you had advance information ki either your like some large player is taking money out of a company or investing in a money, and you took personal positions to take advantage of that thing, right? Stocks buying is like even like lesser. Like I could trade in futures or like options of this company and get leverage. Like मैं 1 लाख लेके 10 लाख का bet लगा सकता हूँ कि this company will go up and make like crores just with this piece of information. So that's why it's not allowed, because it's unethical, right?
But what's stopping a person from doing that?
It's all in the books, right? At the end of the day, insider trading is illegal, and if you have done it and you have a paper trail on it, you can get jailed. So yeah, that's the basic idea. So even at Rubicon and all, like that is what they told me. Like you can do your own trading and all of that, but I need to disclose to them if I am making any big investment as such, and I shouldn't front run their own investments. So that's the general idea. Any other? Cool. Yes. Oh, power. Is it recording?
Yes.
तो फर्स्ट दिन ही मैं टॉयलेट गया, वहाँ पे टिश्यू पेपर है, पानी नहीं है। लाइक ये साले टोल्ड माय बॉस कि मेरा पर्सनल ट्रैक रिकॉर्ड ये वो सब है, तो ही गेव मी एन असाइनमेंट कि देखो लास्ट 5 साल में अगर निफ्टी का मैच करना होता है तो व्हाट वुड यू हैव टू डू। तुम लोग सब ऐसे स्लो पेस पे काम करते हो, प्रिंट डालते डालते।